So the stock market has been declining. Will the housing market follow? Hey guys, I'm Reynolds and it's time for Money Mondays JA, brought to you in partnership with Proven Wealth. In previous episodes of this program, I've told you about the 3 keys to wealth creation: stocks, entrepreneurship, and real estate. All 3 can be used to generate passive income. That's money where you don't really have to do anything. You just sit down and collect. Now, most businesses and the stock market are going through a slump right now due to the global economic crisis caused by the global health crisis. Will the real estate market follow? In the past couple of years, Jamaica's been seeing a real estate boom, mirroring the stock market boom and the general improvements in the economy. Just look around Kingston and you see all the new developments, the high-rises being built, luxury apartments, etc., and the prices to match. This stuff ain't coming cheap. We're talking about 1-bedroom apartments for $25 million. That's about $180,000 US. Yet they've been selling out even before construction begins. But there have been concerns that the market for these luxury apartments especially has become oversaturated. Even before the current crisis, some people have rightly been asking, is this a bubble? After the 2008 recession, for which subprime mortgages in the United States were a major factor, it's a legitimate question to ask. My concern was that we were seeing too much of the same type of development and the boom in new real estate construction wasn't diversified enough. What happened to family homes, townhouses? People want those too. What about commercial space? With the improvements in the economy, new businesses were popping up and old businesses were growing. They need more space, but everybody's building apartments. What about industrial space for manufacturing? Another opportunity. Now, if investors were overly focused on the housing market, there was good reason. Government policy has been making it more affordable to own a home. NHT rates just came down again in the new budget passed in March, effective April 1, 2020. Couples can now get up to $13 million combined from the NHT at just 4% interest rate. 3% if you're a public sector worker, 2% if you're disabled, and even 1% and 0% if you're low income. Now, combined with that, banks are venturing into the 6% range with mortgages as the central bank has lowered its policy rate to just half of 1% to encourage banks to lend more. According to the BOJ's last credit conditions survey, the average commercial mortgage lending rate was 7.95% in December, a far cry from just 5 years ago when you couldn't get a single-digit mortgage rate. So the commercial banks have been stepping up the competition. Interest rates have been falling. The banks are requiring smaller and smaller and smaller down payments. Some banks will even give you extra money, more money than the property you're buying is even worth. They've been advertising no money down and extra money to buy, say, furniture or pay for other expenses. So residential properties have been looking more and more attractive to investors and lenders. And because of these factors, we've been seeing robust growth in the home purchases. Enter COVID-19. Dun, dun, dun. And now we have many people losing their jobs. In a recent article by my friend financial analyst Dennis Chung, he's forecasting that unemployment could hit as much as 24%. Imagine that's 1 out of every 4 people in the labor force unemployed. We're at about 7% now, and that is massive. Now imagine that a lot of these people who just lost their jobs have mortgages and now they can't pay them. Now, the good thing is that most, if not all, banks have announced some form of payment holiday. They're offering moratoriums, in some cases interest-free moratoriums, waiving late fees, etc. for 3 months. And they have to, or else they run the risk of thousands of people defaulting on their mortgages, because what's expected to be, hoped to be, a temporary loss in employment. Once COVID passes, we're hoping most of these people will promptly get their jobs back. And that's best case scenario. But what if it doesn't happen quite like that? How long are banks willing to extend those terms? And what happens after that period is over and the mortgage customer is still out of work? The bank can repossess that home and sell it. And what if we have thousands of cases like this? The result is we'd see housing prices crashing. Already we may be seeing demand drying up due to COVID-19. People are afraid right now. People who were ready to sign on the dotted line for a new house now having second thoughts because what if I lose my job and can't pay the mortgage? What if I've already lost my job? Better to wait out this uncertainty. So let's recap these major factors. 1, large supply, lots of apartments and some houses recently built and some still under construction. 2, low demand as people hold off on buying due to job losses and uncertainty created by COVID-19. And 3, people who are no longer able to service their mortgage payments also due to those same factors. Those things combined, and we may indeed see a plummeting in real estate values in the next few months. On the bright side, like with stocks, it could be a huge buying opportunity for those who have the money. Look what houses were selling for in 2008 during the recession and what they're selling for up to a couple of months ago. But on the dark side, a lot of people may lose their homes, and that's nothing to celebrate. It all depends on how quickly we're able to recover as a nation from this health crisis and people can start working again. Businesses can reopen. The tourism industry, a major employer, can reopen. BPOs also hit last week, another major employer. So people, please follow the orders. Stay inside as much as you can. Wear the masks and practice proper hand washing and good hygiene. Now coming up on Taking Stock. With the number of COVID-19 cases in Jamaica doubling rapidly, one financial analyst is predicting $150 billion in lost taxes. We'll hear the reasoning behind Dennis Chung's prediction. And the country is turning to the IMF for special assistance as growth projections are revised downward amid the great lockdown. We'll speak with IMF resident representative Dr. Karim Youssef. And later, the analysts weigh in on the latest stock market developments. With numerous confirmed cases of COVID-19 emerging from one call center in Portmore, there is mounting pressure for the government to close all call centers. What would be the economic fallout? We'll discuss. That's it for this episode of Money Mondays JA, brought to you in partnership with Proven Wealth. Remember to like this video, subscribe below, and share with a friend. Also follow me on Instagram and Twitter at Kalila Ray and Proven Wealth at We Are Proven. I'm Kalila Reynolds. Stay safe.